Hi, I'm Jason Brown. I'm the Director of Advisor Success here at Foster Group, and this is,
I'm Marcus Seiwig. I'm a lead advisor here at Foster Group.
in addition to being a lead advisor, Marcus also happens to be a CPA. I guess you can see it on the screen right there. And we're thankful that he's both. I guess it helps us out.
Yeah, it's good to be here.
Yeah. And one thing I guess we should mention is that while we give taxes a great deal of consideration here in our planning, we don't actually do tax returns here
No.
at Foster Group.
Correct.
So anyway, Marcus is here because we want to talk to you a little bit about things you can do between now and April 15th that affect your 2020 financial plan and taxes.
Yeah, that's right, Jason. You know, just because the calendar year ended doesn't mean the tax year has completely ended. So there are a handful of things to consider before the tax filing deadline on April 15th. Most of those center around retirement plans. So as you can see on the screen, you have the ability to fund a traditional or Roth IRA up until April 15th. Those limits are $6,000 per person, $7,000 if you are over age 50.
I'm getting close, Marcus.
Yeah, so if you haven't quite funded it all up or you haven't at all, those are things to consider. Business owners have certain types of retirement plans that also can be funded up until April 15th. The SEP IRA can be open and funded up until April 15th. The individual 401k can be funded until April 15th. So that did have to be set up before the end of the year in order for you to fund it up until April 15th. Lastly, from a deferral standpoint, the health savings account can also be funded until April 15th, and those limitations are on the screen, about $3,550 per person or $7,100 for a family. So if you haven't done that, that's another good thing to do by April 15th.
And kind of your final bullet point there, I was actually excited to see that one because we have a son who is going to college. At least we expect him to go to college next year.
Yeah, that's a good one, and it's often forgotten. So 529 plans now, you have the ability to fund those up until April 15th for the prior year. So in some states, including Iowa, you do get a state tax deduction for a certain level of contribution. So it might be worth doing that up until April 15th as well.
Now, talk to us about some things that even early on we should be thinking about for 2021.
Yeah. I think this is a great time of year to get intentional with extra cash flow. So often people have gotten a raise or some sort of income adjustment at the end of the year or the beginning of 2021, and it's a good time to figure out what you're going to do with that extra. So the things we just talked about, funding up IRAs and 401ks, your 401k limits are $19,500 for an individual in 2021. You get a $6,500 catch up if you're over age 50 there. So if you aren't maxing that out, that's a great thing to consider doing, or just increasing that contribution by 1% or 2%. And then saving to those HSAs as well. If you didn't do that throughout the year, it's another easy thing to do to have that kind of auto pay, if you will, into your HSA in each paycheck. So those are great things to just get accomplished right out of the gate.
I should say that the 1%, sort of like just thinking about increasing it, is something I was told when I started here at Foster Group 4 years ago. And that's a little something I've tried to do every year.
Yeah.
As a result of hearing that. So,
Yeah.
We will have had a new administration in January 20th. Biden was inaugurated, and I'm wondering if there's anything that you want us to be thinking about as far as that change in administration goes.
Yeah. What we encourage people to do is stay the course with your plan. You know, predicting the future of taxes is a little bit like predicting the stock market and bond market. We just don't know. And while President Biden has some ideas for what he wants to change in the tax code, that takes a lot of effort to get changed, has to make it through Congress. So we just encourage people not to get caught up in what might change and stay focused on saving. And generally speaking, deferral has always been a good idea. So continue to put money in those 401ks and IRAs along the way and stay the course with your plan and not worry too much about where taxes are heading.
Marcus, you seem to be another person that is reminding me of trying to work on those things I can control and let go of those things that I cannot control, which is an extraordinarily difficult thing to practice.
Sure is. Yeah.
So, well, Marcus, thank you so much for joining us today. We're grateful for that. If you'd like to talk with us about anything that we discussed today or anything else related to your investments or finances, we would love to help. And there will be information on the screen that will help you get in contact with us. Thanks again for joining us. Bye.